Go ahead.
So good morning, ladies and gentlemen. Welcome to this session about private sector access to rural climate finance in Sub-Saharan Africa, organized by the International Fund for Agricultural Development. My name is Thouraya Triki, and I'll be moderating this session. Allow me to start with some housekeeping issues. So first, I would like to remind all participants that this session will be recorded. There is also translation available from English to French. So feel free to hit the translation button, which is down on your screen. And also, I would like to say a few background words to introduce the session. So the Copenhagen and Paris Agreement have set ambitious targets, including the mobilization of 100 billion for climate finance. We don't know yet whether it has been met, but what we know for sure is that this amount, while sounding very high, is way below what is needed in terms of cost for adaptation, which is estimated according to UNEP report to 140 to 300 billion annually. We also know that agriculture remains underfunded. It has been capturing roughly 66% of the global ODA, and the share of climate finance is even smaller. Actually, a recent study done by the IFAD shows that small-scale agriculture captures barely 1.7% of climate finance. That means, or triggers a lot of questions, including how are we going to meet these ambitious targets? What role can the private sector play in order to provide some innovative solutions, some funding? What are also some of the challenges that the private sector is meeting to help and accelerate action, and how some multilateral or specialized entities can support? To try to shed the light on some of these questions, we have lined up a very strong panel today, and I'm very happy now to introduce our panelists. So I will start with Mrs. Liliane Ndabaneze Chabuka. She's the CEO and co-founder of WidEnergy Africa since 2016 in Zambia. As CEO, she oversees solar product distribution, supply chains, finance, and overall the entire administration. She's very passionate to make women the champions in clean energy and climate change response. We have also Mrs. Esther Mururi, Associate Director in charge of Agribusiness at Equity Bank and Foundation. She's based in Nairobi. Before joining Equity Bank, she worked with Government of Kenya in various roles and positions managing agricultural projects, and she's also passionate about farmers' access to finance and sustainable rural development. Next, we have Mr. Kenneth Davis Kasigila, Senior Manager of Sustainable Finance Outreach and Relationship at CRDB Bank, Tanzania. He's a green finance practitioner, passionate about climate change science and related financial risks and opportunities. Next, we have Mr. Mark Hemsworth, co-founder and director of Innovation to Rent to Own, a company that provides over 8,000 productive use assets to rural smallholder farmers and shopkeepers over the past 10 years. Mark started the business in northwestern Zambia, where he identified a gap in the market nobody is addressing. We also have with us Mr. Henrik Franklin, Director of the Portfolio Origination and Management at Nordic Development Fund, NDF. He has over 10 years of experience in international organizations operating in developing economies. Before joining NDF in August 2021, he was the lead portfolio advisor for the Eastern and Southern Africa division at the International Fund for Agricultural Development. Last but not least, we have Mr. Tony Clamp, Director of the Green Climate Fund's Private Sector Facility based in South Korea. He leads the fund's investment program in renewable energy, e-mobility, climate finance, and private equity funds globally. He manages a portfolio of $3 billion and has over 30 years of experience in the field, including senior management positions at the International Finance Corporation and impact investment funds. So without further ado, I would like to start giving the floor to our panelists. And my first question would be to Liliane. Liliane, You told us that you are very passionate about the topic. You founded a company who has ambitious growth and sustainability goals. Can you share with us some of the successful business models in climate finance investments that your company offers? I understand that you use PayGo for renewables. Over to you.
Thank you very much. Yes. So we are WidEnergy, and we focus on the lending portfolio and the distribution network. We offer the affordable path to electrification with the pay-as-you-go product, as you mentioned. These are mostly for 90% of our customers that are farmers. So we conduct direct sales in local communities that are made by our door-to-door sales agents and the sales agents that we recruit and train. I would say that with the climate change challenges that we are having today, solar becomes a solution to increase energy accessibility to the off-grid areas. I would say even to the semi-urban or urban areas. And with the new model that we are having currently as WidEnergy, we will not only provide energy for lighting, but we also connect energy, water, and connectivity combo that will be distributed from community hubs. And that's something that we are super excited about. And in this, we are trying to accelerate the climate actions by empowering women to become basically the agents of the climate change.
Thank you very much, Liliane. Very interesting model. My next question would be to you, Mark. You also have founded an SME. So Liliane business is about solar energy using the pay-as-you-go model. As another African innovative SME, how do you promote rural climate finance?
Yeah, thank you. Yeah, so I think for us, the whole key is to connect to a productive use asset. We know that financing is essential. And so to do that, we have a few ways that we do it so that we actually get a 95% repayment rate, even though almost about half of our customers are earning less than $3 a day. The way that we do that, first, we don't believe in giving anyone cash. So we give assets and services. We avoid the whole issue of diverting cash. Second, it's a bit being blunt, but we don't really trust anyone. We believe in our clients and we get to know them. So we can have that belief that they will pay back. But as far as trust goes, we make sure we get hard evidence on any key information that we're after. So that and then we also get to know them very well so that we can actually believe that their business will pay with that new equipment, can make those installments monthly without a problem. So getting to know them well is really important. And also, again, we still, as far as not trusting them, we still, like a lot of customers will say, yes, we know how to use this equipment, let's get going. But we still have to train them one-on-one in the field. We have to have the customer actually demonstrate that this equipment is something that they know how to use very well before we leave it with them. Otherwise, of course, it will break down soon. Lastly, though, we do take a lot of risk. We don't use any additional collateral. The equipment that we provide is collateral itself. So we're not like an MFI, although we are working with a lot of MFIs now, trying to show them this method. And rather than dispersing cash and also using equipment as collateral. So that seems to be getting traction.
Thank you very much, Mark. And thank you for raising the issue of trust, which is a nice transition to my next two panelists who are representing banks. We know that banks are very often criticized for being risk averse. And my first question would be to Esther, who works for Equity Bank. So Esther, you heard from two SMEs offering very innovative business models of asset-based financing, of pay-as-you-go. As a leading institution, can you please share with us some types of climate finance investment that your banks offer to some innovative SMEs like the ones we just heard about? Thank you, over.
Thank you very much. You have rightly said that agriculture is one of the contributors to the effects to the climate, and we look at what we call challenges in the agriculture space. We look at them like opportunities, because it will be about soil erosion, maybe it's about drought, it's about dependency on water, rainwater instead of irrigation. So those which we see as challenges, we try to turn them into financing opportunities to support the livelihoods, because what we learn from farmers and SMEs who are in agriculture is that the reason why sometimes they interfere with the environment is really not their wish. Is because they want to get some livelihoods. So we look at the challenges they face and try to craft or to come up with solutions to those challenges. And therefore, we may not even talk about what product. We say there are solutions to the challenges that they face. So when we look at the challenges, they will be various. Like in the area of dairy, sometimes it will be about how to manage the waste. And that is why we give them finances so that they are able to do biogas. With the biodigesters, we finance them. If it is farmers who are depending on rainwater, we try to support them to get irrigation. If it is about post-harvest, we try to support them with the funding for value addition. So it's really looking for solutions to the challenges to climate change and looking at those as the products. And we have very many of them. We have lined up for facilities for farmers, for SMEs, for those who are doing value addition, because food waste is also a problem to the environment. And therefore, anything that we do to finance such challenges, we look at them like financing opportunities. And it's a win-win for everyone. Thank you very much.
Thank you very much. I like it, Esther, when a banker is speaking about opportunities and solutions. That's definitely very interesting. Now I turn to Kenneth, who is also representing another bank. So Kenneth, you are a senior manager and the climate finance practitioner in a commercial bank in Zambia. Tanzania, sorry. You've been working with a lot of smallholders. So based on your experience, how do you see we can unlock climate resilience investment for smallholders in Tanzania? Over to you.
Thank you, Thouraya. As you have introduced me, I'm Kenneth Kasigila from CLNB Bank, Tanzania, the leading financial service provider. And we're also leading in terms of extending our credit to the agriculture sector by over 45%. So your question on how we can unlock the climate resilience investment of smallholders in my country, Tanzania. So agriculture is really important economic sector in Tanzania that play a great role to the national economy. In the year 2020, the sector contributed about 26.9% of the national GDP. And most of the Tanzanians engaged in agriculture are smallholders farmers. So the following are some of the suggested ways to unlock climate resilience investment of smallholders farmers, not only in Tanzania, but that may be applicable to the wider part of Sub-Saharan African countries. So number one is to implement the innovative financial products related to agriculture adaptation, that is agriculture resilience adaptation lending, and also agriculture resilience adaptation guarantee, and also on the crops insurance for adaptation and climate resilience agriculture technologies. But we also need some policy interventions and technical assistance to advance agriculture resilience and adaptation. Policy intervention with the potential to reduce the perceived risk of lending to agribusiness and climate adaptation activities with the ultimate goal of supporting large-scale investment in climate-compatible adaptation solution that includes the introduction of the green finance policies and the regulations, but also introduction of the environmental and the social impact assessments for projects and programs loans financed by banks and other lenders to ensure projects financed are friendly to the environment. So capacity building to the smallholders farmers is one of the key elements that will include upgrading skills to perform climate risk assessment and integrating climate risk management within their agricultural lending portfolios as well as working with the smallholder farmers on identifying the long-term adaptation opportunities. So providing farmers with affordable access to adaptation tools, knowledge, and the capacity required to combat current and future climate contexts and agroeconomic specialties in Tanzania is one of the key areas. So we also have another area in terms of the concessional funds to incentivize adaptation practices and the technology investment with the view that the share of this type of loans will progressively increase to become the norm over time, supported by the program technical assistance for capacity and awareness. Thank you for that.
Thank you very much, Kenneth. Very interesting. So we heard from the SMEs, we heard from the banks. I would like now to turn to some leading bilateral, multilateral institutions. And I would like first to ask Mr. Henrik Franklin from the NDF. So Henrik, we heard from our African partners, the SMEs, the banks. How can an institution like NDF, based in Helsinki, help in promoting rural climate finance schemes in Africa? Over to you.
Thank you, Thouraya, and it's great to be on the panel. It's nice to reconnect. The Nordic Development Fund is the joint Nordic international finance institution focused exclusively on the nexus between climate change and development in lower income countries and countries with fragile situations. And we provide financing on concessionary terms in the form of grants, loans, and equity. And we engage both with public and private sector. And we use our financial instruments very flexibly depending on the project. And at the portfolio level, we aim to have about 50% of our financing in the form of grants. And generally, NDF would enter as an investor, as a junior investor, to try to crowd in more senior investors. And while we do work across the spectrum of lower income countries, we have a geographic focus on Sub-Saharan Africa, which should reach about 60% of our financing. And we do focus both on climate change mitigation and adaptation, but adaptation is increasingly getting more focus, and our aim is to have about 50% of our financing there. And we also promote gender equality in all our operations. But being a very relatively small and nimble organization, our basic principles of engagement are to complement, co-create, and convene. So we always engage in different co-financing arrangements, both financial and non-financial partnerships. And our focus is really on developing early stage project design and structures, and also being catalytic for launch and scale. So we currently have two facilities that we manage. One is the Energy and Environment Partnership for Africa, EEP, and another one is the Nordic Climate Facility, which both serve as innovative business incubators in areas like renewable energy, sustainable agriculture. And actually, WidEnergy is one of the successful grantees from our program, so that's very nice to see you on the panel. And in those kind of situations, we would come in with perhaps a ticket size of around 5 to 15 million euro, which would then, of course, be on then to different smaller ticket size projects in the continent. But we also have, from our end, relatively small grants. They're called booster grants, up to 500,000 euro, which can go a long way, for example, to help a country prepare or design a GCF proposal or structure some kind of financing, innovative financing structure. And we do have experience in blended finance funds, for example, the Climate Investor 1 and 2, CRAFT, and we have several in the pipeline, and we look forward to engaging with all of you in this moving forward. Thank you.
Thank you very much, Henrik, for sharing with us some of the exciting work that you are doing. And I'll turn to Tony. Tony, I think everybody knows the large scale of resources that the GCF has and the leading mandate that you play. Obviously, you also play a very important role in managing the private sector facility. Can you describe GCF private sector investment approach in support of rural and agricultural sector in Sub-Saharan Africa? Over to you.
Yes, good afternoon from Korea, Thouraya and colleagues. Well, as you indicated, the Green Climate Fund was set up, with quite substantial resources, but with a particular focus to support countries and a critical focus also on Africa. In fact, half of the the funds of the Green Climate Fund must be invested in Africa and LDCs as a whole. And as you another key element is adaptation funding. Half of the funding provided is adaptation, and agriculture increasingly, particularly in rural agriculture in Africa, is under threat with all the demands of population increase that means, but all the challenges in terms of crop yields, in terms of drought, not to mention COVID and so on. Obviously, a particular focus. And certainly it's a major part of the funding to date, and we work closely, clearly, with IFAD, Nordic Development Bank, and many others, also with CRDB. On the private side, we're increasingly active in this sector, and two particular areas in terms of providing concessional funding and trying to mobilize funding from the private sector in this area include support for funds. So, for example, impact funds such as the Acumen Resilient Agriculture Fund in East and West Africa. We provide funding for that, and there are more funds to support processing and increasing efficiency in and around the small scale agricultural sector there. But also in terms of credit lines, so working through very much the local partners which we have, such as CRDB and others, to support all the various activities they have, all the connections they have through other organizations, community-based organizations, smallholder farmers and the like. So very much a focus on capacity building as well, in a similar way actually to a number of the other multilateral, bilateral organizations such as Nordic Development Fund. And yeah, absolutely critical focus and an increasingly important one. Thank you.
Thank you very much, Tony. So now we have heard from all our speakers, and just to wrap up, we seem to have SMEs that are offering very innovative solutions, including some that are tackling issues like the lack of electrification in Africa, the lack of credit history or collateral. We heard from the banks who sees opportunities to fund the sector, from leading institutions like NDF, GCF, who are also willing to work with these local partners. But actually, if I try to reconcile this, what we heard so far, with what we are also seeing on the ground about the lack of financing, and actually, I think this summer with the heat wave, with the flooding, was a very nice reminder that we are not on track. There seems to be something here that is not working well, and that's where I want to focus the discussion, the second round of question with our panelists. So, of course, in an ideal world, we should have these SMEs meet their financing, providing services to smallholder agriculture, and banks financing, and of course, the wholesale entities like NDF or GCF supporting them. But obviously, this is not happening, at least not happening at the scale that we want to. So maybe my first question to you, Liliane, you described it earlier, a very innovative business model, but assume that this model entails also an investment risk of lending to deep rural customers. Can you please walk us through some of the challenges and how you are managing this risk to sustain the growth of your company? Over to you. Liliane, you're on mute.
Thank you. Sorry for that. So I would say that it's a very challenging environment. We are not going to talk about the impact of the pandemic. That would be a different topic for a different day. But starting as a small startup company, the challenge is getting to the growth where you become investor attractive. And you basically, at least for WidEnergy, we had to depend on grants initially, where you are attractive. At the same time, you want to reach the milestone, you want to have the impact that you are working for, and that comes with challenges. You reach the milestone you want to reach, but then the whole challenges come up. We have the foreign exchange fluctuation. With the loan, obviously, we buy on cash and we sell on loan. You have the loan period that is long, that does not allow you to match with your lead time. And with those challenges, obviously, cash flow becomes a shortage. The shortage of cash flow becomes completely inevitable. We don't have access to banks that could finance in local currencies. Obviously, if you have to get the loan in foreign exchange and pay back using the local currency, it's a non-starter. So we've gone through that. We go through challenges of getting the loans locally. We've been successful in accessing to grants and impacting the communities, getting to a level where we can invest, we can become investor ready and attract more investors. Yes, so we plan to get to that where you can have loan or equity in the company that can allow you to mitigate the challenges that we have on the ground. But otherwise, on the ground, you have all sorts of risk. You have poor network that doesn't allow you to have access to your customers as you would wish, or customers having access to you. So those were the limited sources of limited to high risk capital. Mostly the people would prefer that on the high WidEnergy. So in brief, I would say that those are my main challenges.
Thank you very much, Liliane. These are very valid points. I would like now to ask the same question to Mark. Mark, you're also the founder of an SME. What are some of the opportunities, but also the challenges to boost rural climate finance according to you? Over.
Yeah, thanks. Yeah, I think like Liliane, we have a business that's non-deposit taking, and so the more we grow, the less cash we have. And so you can't run away from the fact that capital, especially affordable local currency working capital, is needed. So I think for me, my first wish is to have help on that. We've, similar to WidEnergy, we've been able to fend off some of these currency fluctuations and extreme inflation through grants, but that's not sustainable and not how I would like to build our business further. So that's challenge number one. I think challenge number two is the transaction cost. So the opportunity there is to further digitize. We've seen a lot of progress in the last 5 years around, especially the PAYGO technology, moving beyond the small home solar into what we now have is PAYGO technology on productive use assets, which is fantastic. That's a big step in the right direction. Especially if you can monitor the asset, how it's being used, that gives you further insights. But I think we need to take it further. I think that, and of course the digital payments. We've, integrating with the local, mobile money guys. But we can go further, I think, in using especially satellite imagery for farming. So that would be my second wish, is to have a platform where we are able to buy affordable, satellite imagery, maybe not on a daily basis, but a weekly basis. And I think this is all coming, but very slow progress. And it would just allow us to really monitor what's going on in the field without having to go there.
Thank you very much, Mark. A very good question. So, Esther, I want to go back to you. You are working on Henrik Agriculture in a large African regional bank. We heard about the needs for working capital, the needs for longer maturity, for local financing. Can you share with us some insights about the type of investments in agriculture that Equity Bank has? Do you actually provide this kind of financing solution that were mentioned by Mark and Liliane? Over to you.
Thank you very much for that question. And like I said earlier, we look at the challenges in climate and try to provide solutions for those challenges. But then there are also risks, and the risks are not a perception; it's a reality that in agriculture there is certainly some risk of drought, sometimes of floods, sometimes of desert rocust, sometimes of diseases and all that. So we try to introduce solutions like insurance. But the challenge we face when we try to introduce insurance is the knowledge about insurance in a market like in Kenya, in most of the countries in the region, the knowledge and the penetration of insurance is very low. And maybe if we get partners who can help us to address that, so that we create more awareness, sensitization to the potential partakers of insurance, it could reduce a lot of the risks. Then another issue is about the risk of like lending to, you can imagine when we are lending to a farmer who is growing trees, whether they are fruit trees or whether they are woodlots or whether they are forest trees, you know, the kind of time it takes. We need a lot of, time for the capital to be paid back, for the loans to be paid back. So in such areas, we then require something like maybe a risk sharing arrangement. And we have done that with some of the partners, because we also believe this is not something we can work as an organization alone. We need partners, and we've been working with IFAD, with FAO, with WFP in one of the programs that we have. And this kind of partnerships also reduces risk, because you are spreading your risk among many partners, and also with the local governments and the national governments. So to address the risk, we need a lot of consultations and good understanding of what it is that we need to do, so that we're able to finance. And that is where now we need like maybe investors who can come and work with us, so that we're able to reach these communities. And like I said earlier, it becomes a win-win situation, where the farmers win, the SMEs win, and our own organizations also become less exposed. So those are some of the solutions we think we can be able to provide for us to continue, because this is something we also want to continue. In fact, as an organization, we have even undertaken to plant 35 million trees as an organization, just to support this initiative, and also to see how to benefit from the carbon credit arrangements for the farmers and the communities that work for. Thank you very much.
Thank you very much, Esther. Kenneth, I would like to turn now to you. You walked us earlier about some of the ideas on how we can unlock climate finance. And now I would like actually to circle back to the first intervention and ask you, what are some of the key challenges also that you are facing actually, and the smallholders that you are dealing with are facing to access climate financing from your perspective in Tanzania? Over.
Thank you very much, Thouraya. Some of the challenges have been spoken by my colleague from EcoBank, but to add on those, I think limited access to credit is one of the key challenges. This fund has been very expensive, the smallholder farmers, and some of them, they don't have the documents, for KYC purposes needed by the banks. But at CLDB Bank, we are trying our level best to include them financially, provide some requirements to onboard for financial inclusion purposes. But you will find that the cost of funds obtained by the banks are extremely on the expensive side. So at the end of the day, the lending rates also goes up to the level where most of the smallholder farmers cannot access. But with the advantage we have with CLDB Bank, with our accreditation to the GCF, we have managed to develop innovative financial product funding proposal that we are trying to access, that majority of the beneficiaries will be smallholder farmers. So another area is where I find one of the key challenges that smallholder farmers are facing is on the limited challenges that are being brought by the climate change. This is really a problem. And so we need like innovative financial product like insurance schemes and the guarantee facilities to assist smallholder farmers to undertake this kind of challenges. So you'll find that even the cost of inputs that smallholder farmers are using are on the relatively high. So another area where I find to be one of the key challenges smallholder farmers are facing is on the low prices of the agricultural producers. So they spend a lot of efforts, a lot of money, but at the end of the day, they are facing a number of marketing challenges to sell their produces. So another thing is on the pests and the diseases. So these are one of the key challenges that we found in the market that smallholder farmers are facing. But at the bank, we are trying our level best to include them on board and take them through capacity building to make them bankable. So at the end of the day, you find that CLDB Bank is having a number of smallholder farmers in our basket. Thank you very much.
Thank you very much, Kenneth. Henrik, you shared with us earlier some of the innovative products. What we heard today from the banks is that they're really struggling in terms of risk, also the lack of history, the variability of climate change, the fact that the penetration rate for insurance is very limited, transaction cost is very high. Can you maybe also share with us, we now have a better understanding of the product that you offer, but what are some of the challenges that you are facing to deploy these instruments to address some of the issues that were raised by both Esther and Kenneth? Over to you.
Thank you, Thouraya. So let me start off by just emphasizing that small and medium enterprises, SMEs, are the engine of growth and really key for achieving the sustainable development goals, including climate change adaptation and mitigation. And many of the rural SMEs, especially in Sub-Saharan Africa, many of which are in the so-called missing middle, have big challenges, as already mentioned, to obtain affordable financing, especially at the early stages of their financing growth cycle. And commercial banks and institutional investors generally have a low appetite to risk, require relatively higher returns, and are often reluctant to invest in startups and greenfield companies, both including because of the either real or high perceived risks, and also this vulnerability to climate change. So unlocking such finance from commercial investors and institutional investors is key. And for that, having different de-risking mechanisms, for example, as Kenneth mentioned, is important. And this can be done, for example, through establishing blended finance funds with tiered structures, where you normally have junior investors, for example, like the NDF, that are willing to take a lot of risk to then attract other senior investors with higher return expectations. And it can also be coupled with different guarantee schemes. The challenge, of course, is to identify both like-minded junior investors, like with NDF, but also to attract these more senior investors to ensure the close of these funds. And we've also found that it can be challenging to identify strong fund managers with strong local knowledge of the market on the ground, having presence, and also having capacity for impact monitoring. Another limiting factor is that many businesses face is having weak business plans that can demonstrate that they're bankable. So business development services are also important, and that's something we can also finance, but it's very important that they are provided on a demand basis, really what the companies need on a timely basis, and also coupled through the financing continuum with opportunities to access other types of credit or financing as they evolve on their financing continuum. One of the things we also found is that sometimes big institutional investors may not be willing to invest, for example, in Sub-Saharan Africa, where there are many, for example, small funds, because they don't have the capacity perhaps or experience to evaluate the track record of these kind of funds. So one of the things we're looking at is establishing so-called fund of funds, where a big institutional investor could have a fund manager that does the job to go out and scout and source for different smaller funds and do that due diligence, and that can then allow bigger institutional investors to have more impact and scalability. So yeah, just to conclude that NDF is an investor with a high appetite for risk, so please count on us moving forward. Thank you.
Thank you, Henrik. And I will finish my list of questions with Tony. So Tony, you told us in the beginning that GCF was created to address actually the market and the funding gap. You heard the very long list of challenges that both SMEs, banks are facing. But I assume you also, as an institution who has this ambitious mandate, face your own challenges to deploy the funding. And I would like you actually to focus on the most critical challenge that you foresee to provide private financing to agriculture in Sub-Saharan Africa. So in other words, can you give us the secret in order to be able to access the GCF valuable resources? Over to you.
Yeah, thanks very much, Thouraya. Well, no secrets, but it's a very, very tough challenge. The scale of the challenge is significant. It's so crucially important. We all know that. I guess all good things come in threes, and to pick three examples of where we are focusing our attention, certainly in terms of the funding which we provide, it's there to help mobilize, you know, all of that other money that wants to find places to invest and support the development, including, you know, of an economically important critical sector, you know, and that's true. There are undoubtedly challenges in terms of, you know, that risk perception, you know, in terms of matching all of those funds internationally to the local, very specific situations, you know, which need the funds to develop, and we can help provide some funding in that respect to unlock that through flexibility, through grants, through first loss facilities, and so on. But it's a very distinct and local sector. So the critical area I mentioned before, of working with partners which really understand the needs on the ground, you know, such as CRDB and others, you know, that remains a critical area, providing support, concessional support of credit lines, which can go and be structured in very small packages to help individual situations. And then thirdly, in terms of the technical assistance. So if you look even on the private side for the GCF activity, including the agricultural sector, there are really no examples where we don't, as well as provide funding for, you know, for the investment in the, you know, the supply chains and the intensification or efficiency improvement around production, around resilience, protection, and so on. Even about new initiatives in insurance-related products, which are critical, supplemented with all of that are technical assistance to work, you know, to enhance the capacity of the partner banks, of the underlying local institutions which work with the farming community. So no magic bullets, but absolutely critical sector, and you know, that's our take.
Thank you very much, Tony. And I like how you summarize. There's no magic bullet. There are some interesting experiences that I'm looking at the chat, and for example, shared some interesting insight about the model of the Credit Bank PLC. I would like to remind our also our participants that they will not be an opportunity to take the floor, but they can ask questions, and will be selectively actually now picking up a few questions. There's a question for Esther. There are exciting digital insurance technologies. The key drawback is that there are new, thus having a major challenge in terms of financing. How can financial institutions bridge this gap? So this is the first question for Esther. I will also share with our panelists 3 other questions, and they should feel free actually to share their insights. The first one, which I feel is more for the banks or the developing institution, is how would the finance get to the local? So that's one. The second question is, most of the challenges that SMEs met was access to finance to work as per their capacity. Their limited capacity hinders their aggregation capacity, which leads to the amount of supply in the market. What solution will you propose? Provide us an advice or experience. Then there's a question to the banks. What is the bank's experience when it comes to using loan guarantees? Would you characterize them as transformative and of high relevance, or would you rather identify other more effective instruments which would catalyze capital flows? And last question will be, making is concessional capital risk mitigation instruments are an essential ingredient here. How can we mobilize more of this kind of finance? And I would like to remind Demru that this session is recorded, so they should have access to it, because there is a question about access. Last but not least, I saw some interest to connect to both Henrik and Tony. So I remind everybody that the digital platform is also there to help connection. I saw that Henrik also shared his email on the chat. So let's maybe start with the question to Esther. Then I feel there are 2 questions which are natural candidates for both Tony and Henrik, and 2 for Kenneth and Esther. So Esther, do you want to go first?
Yes, I can go first and really say how to assist those who require financing. Is just a question of, you know, a discussion because they have to come to us. And when they come to us, we are able to sit down and look for a solution together. We said it's not about product, it's more about a solution. So the moment we understand what the challenge is, say for example, is a farmer who is looking for financing, maybe to do maybe drip irrigation, for example. And maybe at this point, I can also say that we have very many farmers who are doing irrigation, but they are doing the flood irrigation, which uses a lot of water. So the moment they come to us and they tell us this is a challenge we have, we are able to sit down with them. And we also bring in other partners. Like I said, we have brought in IFAD in some cases. We have brought on KFW in some cases to just support us with the farmers to have, supporting the farmers to get water as a critical ingredient in the production. So we sit down and we see who will play which role, and that is what we call partnership. So we try to address the challenges through partnerships. And maybe I can also take this opportunity to answer the question of risk funds or risk sharing facilities, and say these facilities are very critical. They have really helped us. One of the biggest projects we have, I call it big, even if the numbers may not be so big, but the impact is very, very big, where we've been able to work with farmers through the government of Kenya, an institution called Kenya Forest Service. And we've been able to help so many farmers to get into forest activities using a very innovative initiative where farmers are given loan. Part of the loan go to do a livelihood activity, and the other part of the money go to the forest or to the environment activity. And they are paying these loans. And we see these are practical cases of proved concepts. We just need now partners to help us to scale this one up. So we have many examples to show, and I want to say it's doable because we are doing it. The only challenge is that we need to grow to scale. We need more partners. We need people to come to us, those who are SMEs or producers, and therefore together we'll be able to move forward. Thank you very much.
Thank you very much. Maybe I would like to give the floor to Tony, because there were also questions about how can GCF get to the small packages to boost growth first, then when they grow structurally, they can get for the bigger one. So Tony, and then Henrik about also the other question, then we will finish with Kenneth.
Yep, thanks. Yes, I mean, that's a good question. Obviously, if you look to any of the big multilaterals, with the significant sums, how do you translate that into individual, relatively small and appropriate funding packages on the ground to actually help smaller farmers in the SME and even MSME sector? Look, the short answer is through an intermediary arrangement. We all know that. I mentioned previously working with credit lines, for example, with local banks. With or without the relevant concessionality, flexibility in terms of tenure, just to make sure that the overall projects are economically viable, and they act as a local distributor of those funds. So it's a partnership arrangement. Similarly, of course, with the funds, and we're seeing an uptick. Undoubtedly, I wouldn't say it's an acceleration, but it's definitely more and more of our funds regionally and internationally focus on the agricultural sector. Again, it's an aggregation style model. And the example I quoted earlier of Acumen, it's a $50 million fund that they'll break that down into multiple individual investments at the local level. There's clearly need for more and more of that, but it is an aggregation model with partners on the ground. Thanks.
Thank you very much. Henrik, over to you.
Thank you. Yeah, just quickly, thanks for the interest. I would say, it depends on the facility and the type of funding, no? But for example, the Energy and Environment Partnership, which is a facility managed by NDF, is based on call for proposals where there's obviously a need for co-financing, so kind of a matching grant approach. But then, as Tony said, we all very much work through indirect investments, and there is really the fund manager's role to identify and sort of scout for companies that are interested, but also bankable to be invested in. So that's more or less how it works. I think it's great to see on this panel we have several sort of local financial institutions like Equity Bank, for example. I think it's really key for sustainability that in all our interventions we rope in these kind of institutions to make sure that the opportunities are available on the ground. But I think it's really about the continuum of the financing cycle. So we've had companies, for example, in the EEP that received initial grants, and then we had a new kind of window called the catalyst window, where they were then able to access further credit. So I think we need to make sure that once we start investing in something that starts working, that we sort of support them, ideally at some point, accessing local finance, but there might be a need for additional concessional funding, to further kick them a bit on the way. Thanks.
Thank you. Kenneth, over to you.
Thank you very much. My colleague has spoken a lot, but I'll go straight to the how can we work together with various funders in lowering the cost of funds. So the survey we did recently, I think this is also applicable to most of the African countries. You'll find that the smallholders farmers are highly charged compared to all other customer segments. So there are a number of reasons. Yes, they are very risky. At the same time, these are the ones who are heavily involved in the agricultural activities. They are heavily contributing to the economic well-being of so many nations in Africa. So working together with the various funders like IFAD, GCF, to ensure that we have a cheap source of funds, and also working together to implement innovative financial products related to agriculture climate adaptation, ranging from guarantees, facilities, crops insurance, etc. This can really help to change the level field, and we can really assist these smallholders farmers. Thank you very much.
Thank you very much. I'm actually mindful of the time because we're already running 1 minute late, and I need to do a good job as a moderator. So if you allow me, I would like to first thank our panelists for making the time to join us today and share with us some of their very interesting views, their expertise, and also their own challenges that they're facing on a daily basis. I would like also to thank all participants who joined us. I see a lot of messages on the chat. And as my colleague said earlier, I'm very happy to see several representatives of financial institutions, but also of private sector companies that are offering solutions. And this actually leads me maybe to sharing with you some of my key takeaway messages from this discussion today. The first one seems that to be that we should look at the glass half full. Today we learned that there are some very promising models that are being deployed by the private sector to tackle the issue of climate finance and to address climate mitigation and adaptation. We heard from both Liliane and Mark, who are actually having very different but interesting models. We heard also from the banks who seem to be very keen to support these efforts, who are developing financial products, but also from some bilateral and multilateral institutions, notably the GCF and NDF, who are also devising efforts to make sure that the financing is deployed locally to address some of the gaps and the challenges. The second key message that I got from today's discussion is that the different stakeholders within the financing value chain require different types of interventions. Liliane, for example, mentioned the need for some grants at a very early stage to make sure that the business model is bankable, that they reach a state where they can take on more financing. Mark mentioned the need, for example, for affordable satellite imagery to ensure that we address the issue of transaction costs. For the financial institution, we also heard about the challenges, which are quite actually common from what we've been hearing about the broader issue of access to finance. But of course, the issue of foreign exchange risk, of maturities, of the working with smallholders, the limited capacity, the fact that they don't have the documentation they need to perform the KYC, the increasing risk of fraud. But we also heard about some interesting ideas, like, for example, linking the lending product to insurance, using the risk mitigation instruments, working with partners like multilateral institutions. We also heard from both Henrik and Tony about the work that they are doing to address these issues, and make sure that the financing is local, but also the challenges that they are facing. Because let's also make sure that we don't have a magic stick or silver bullet, to borrow Tony's words. They also face challenges. I think this leads me to my third takeaway message, which is the need for us to work together as an ecosystem to make sure that the financing flows from the wholesale institutions to the local institutions, to the SMEs, to the smallholders, and of course, some of the innovative models that are put in the chart would be critical. So it's also a matter of knowing what is out there and making sure that we link them to the right financing institutions. So I hope I summarized well the different interventions that you have learned more about these, our panelists, about this issue of rural climate finance to agriculture from today's discussion. On behalf of IFAD, I would like to thank again our panelists, also the organizer and EGRF for giving us the opportunity to organize this panel. Obviously, IFAD has very strong commitments to scale up climate finance for agriculture with a particular focus on small-scale producers, on women, on youth and other underserved groups. We have over time scaled up our financing through what we call the program of loan and grants, which provides sovereign financing. But now we are increasingly coming with more tailored programs, including the ASA Plus, but also the private sector financing program, which was launched a few months ago, and which aims to actually try to address this market gap about this market segment that is too big for the local banks and too small for the large multilateral institutions. And we are leveraging here on IFAD 40 years of experience. We want to be more than a partner providing financing, also working on the non-financial constraints that were highlighted by the banks. So without further ado, I would like now to actually to close this panel. Thank you all for your interest, your attention. Feel free to use the Deal Room platform to connect to our panelists if you want to learn more. This section, I want to remind everybody, is also recorded in case you want to just listen again to some of the arguments. Thank you very much, and I wish you a wonderful morning, afternoon, evening, depending on where you are. Thank you very much. Bye-bye.
Thank you.
Thank you.
Bye.
Thank you so much. Bye-bye.
Bye-bye. Thank you. Thank you for your attention.